Almost everyone in the world has seen the decline in the stock market in the last couple of months. Trillions and billions of dollars sucked out of the biggest financial market in the world in the matter of seconds. On February 19th, of 2025, the S&P 500 hit its all-time high of $6,152.87. April 7th in 2025, just 5 days after Liberation Day, the correction was over and it hit its low of $4,836. From February to April, the 3-month period that followed, the market saw a 21% decrease. This decrease was all due to tariffs and the rising concern that it had on the economy. A lot of investors were fearing that stagflation could become a problem or we could reach into a recession. It was a all-out war versus China and the US to make favorable trade agreements. During this time, we saw the fear and greed index go from extreme fear all the way to now greed. Recently, the market has been able to see a rebound with a 23% increase. This is primarily due to Magnificent Seven companies producing good earnings and the economy still holding strong. There was also a 90-day pause on tariffs and possible trade agreements in the horizon. Now, I am going to give 3 possible scenarios for the future of the market in 2025. First is consolidation, sticking within a range of prices for weeks or months, eventually breaking that resistance or support level, continuing to go bullish or bearish. Another is recovery, making a all-time high and making that V-shaped formation, continuing its bullish uptrend. And the last is another decline, continuing to crash, going into no man's land. I believe that the most likely scenario for the market is to stay in this consolidation period, eventually breaking higher by the end of summer. We can see that it is already falling into this previously made consolidation zone that I outlined on the chart. In November 2024 all the way to March 2025, the market was kind of consolidating, eventually making an all-time high in February 2025, and then breaking that support level and going lower due to Trump's tariffs. This is nothing new for the market. We can see that in June 2022 all the way to March 2023, a long period, the market was consolidating, eventually breaking that resistance level and going higher. On the other hand, the market has gone lower in consolidation periods. We can see in October 2018 all the way to December 2018, the market was falling into this consolidation zone, eventually breaking that support level and going lower. Now, there's a chance that the market could have this V-shaped recovery, continuing to go bullish and breaking its all-time high, although I don't think that this is a plausible scenario. We can see in 2020 during the pandemic, it had this V-shaped recovery, continuing to go bullish. We also can see in the 2008 financial crisis, it also had this V-shaped recovery and continuing to go bullish. If we look at the federal fund effective rate, the interest rate controlled by the feds, during 2008, they lowered the interest rate to an extreme amount. This is due to making borrowing cheaper and thus increasing the amount of funds going into the stock market, increasing it and giving it strength. We also saw this in 2020. If we look now, the federal funds effective rate is not that low. This is why I believe that this V-shaped scenario is not really going to happen. Now, the last scenario I presume is very unlikely is a total crash in the market, going into no man's land, something that we haven't seen to significant levels since 2008. I believe this is very unlikely because the feds are very on top of the current market and state of the economy. In their last meeting, they held rates steady, but many investors are very wary that they will lower rates in case of the market continuing to crash. It's still holding strength now, and the fear and greed index is at greed, so investors are somewhat optimistic in the market, and they're flowing money into the market even during maybe times of some economic stress. Now, this consolidation period is probably the most likely scenario, but there are 3 key elements that are very important about this consolidation period. The first element is this 90-day pause on tariffs. There is no doubt that this pause is keeping the market alive, and after the 90 days, if Trump continues his aggressive approach on tariffs, it could break the support level and go bearish. Although I believe that Trump will not continue his aggressive approach on tariffs. During this 90-day pause, he has been able to get some key negotiations with other countries. First, with the United Kingdom. The UK removed its 20% retaliatory tariff on US beef and established a tariff-free quota for US beef and ethanol. They also agreed to reduce tariffs on a limited number of UK automobiles, and negotiations were initiated on quotas for UK steel and aluminum, as well as key negotiations with China. Both countries agreed to significantly reduce tariffs, resulting in a 30% baseline tariff on China origin goods. All of this, in my mind, is going to boost the stock market as more favorable trades and a less aggressive approach on tariffs will result in the market breaking that support level and continuing to go bearish. Another key element of this consolidation period is the economy and where it sits with strength. Right now, it is sitting pretty high with strength. The GDP did decline in quarter 2, but for now they are holding strong. A lot of analysts are guessing that the damage done on tariffs is not yet really fully seen, and some of these economic indicators will decline, which could result in this consolidation period breaking that support level and going bearish. And the last key element of this consolidation period is quarter 2 earnings. Just like the economic indicators, I think that it will take a little bit of time to really see the impact that tariffs have done on businesses, and that's why in quarter 2 I think that there will be a slight impact seen on some of the earning releases for Magnificent 7 companies or just some of the top companies in the S&P 500, which will result in a slight pullback, maybe breaking that support level and going bearish for a slight period of time, but continuing to go bullish in the long term. Make sure to check my Discord and my website in the link in the description for what I am trading in and what could possibly make you money. Thank you guys so much for watching. Hope you enjoyed the video. Like, subscribe, and comment.